It's Saturday, May 6, 2023. I was going to take a day off today, but I was going through some of the news today, and there's just so much going on. I want to share some of this with you. I printed up a bunch of articles. Please feel free to comment on any of these articles and topics, any of them that you want to comment on. Please comment down below. Also, make sure to give this video a thumbs up, share it, and make sure you subscribe. But I want to get right into this. Yesterday, we watched a pretty nice rally on Wall Street, and I asked the question, what in the world caused this rally yesterday? And many of you commented down below, and many of you were right. And here it is, investors.com, 19 banks grabbed for $32.6 billion government lifeline. So many of you commented down below that the banks were going to receive another $30 billion. And here it is today. 19 banks, including PacWest and East West Bank, loaded up with $32.6 billion from the Federal Reserve's new Bank Term Funding Program, BTFP. So now we know why the markets were up yesterday. I don't think it was really because everybody's going out buying a $1,500 iPhone. Maybe that had something to do with it, but this is it right here. Markets love when there is injections of money. And so the printing presses are firing up again. And now here we are watching the Fed bail out banks yet again. And what do you think that this is going to do to your purchasing power? Do you think that this isn't going to cause more inflation? Another $32.6 billion. Here's one from the Hedge today. U.S. bank run escalates. Deposit outflows top $360 billion in last 3 weeks. Yet you and I are being told everything's good. This has been fixed. Everything's fine. The banks are healthy. They're sound, the consumer's strong, everything is okay. Yet, 3 weeks, we witness a $360 billion outflow from U.S. banks. Here's another one from the Hedge today. It's spooky. Stanford professor warns thousands of U.S. banks are potentially insolvent. I apologize. Yesterday, or the day before, I said it was a couple hundred. Well, now it could be a couple thousand. Professor Amit Saru, professor of finance at the Stanford Graduate School of Business, presented a grim warning that the regional banking dominoes are falling. Collapse of several high-profile banks are most likely not an isolated phenomenon. Saru said that more than half of America's banks, and we're looking at 4,800 banks presently operating in the U.S., more than half of that 4,800 are burning through their capital. He says, let's not pretend this is just about SVB and First Republic. A lot of the U.S. banking system is potentially insolvent, he says. And you have half of Americans that are concerned or very concerned about the safety of their money in the banking system right now. So, do you put all your money in the bank right now? I believe you should only have enough to pay the bills. You know, I watch a lot of videos, and I've noticed that a lot of people are saying, pardon, Nugget here is playing with their toy now. A lot of people are saying that, you know, you should spread your money around. Come here. Nugget wants to say hi really quick. Say hi. All right. A lot of people are saying that you should spread your money around. I don't disagree with that, but I think more importantly, you shouldn't have most of your money in the banks, because if you believe that thousands of banks are insolvent and you're pulling money out of one bank and just putting it in another bank, or spreading it into 2 or 3 or 4 or 5 banks into an insolvent system, you're still at risk. You're still at risk. So I think the most important thing you could do right now is be your own central bank and not have most of your money in an insolvent system, in my opinion. Here's one from the Hedge. Take care, this is Michael Snyder, says, take care of America first. We're sending mountains of money overseas, but our own communities are dying. Nothing could be further from the truth. Look at the debt right now, $30.7 trillion of debt. And our cities are rapidly decaying. If you've gone back to some of my past videos when we're in Los Angeles filming the homeless crisis, take a look at what is happening to Los Angeles. It is decaying. But we are handing prizes, Michael Snyder says, prizes to almost everyone else in the world as if we are Willy Wonka. In 2020, the U.S. gave 157 different countries, foreign countries. In 2020, the U.S. gave 157 different countries foreign aid. We have just decided to send another $300 million to Ukraine. And I'm not sitting here to get political. I'm completely against the war. I hope it ends immediately. But I don't believe we should be financing somebody else's war, especially when our cities are decaying and we literally have war zones in our cities right here in America. Crime's exploding, retailers are closing, cities are decaying. It seems to me that the U.S. is on a suicide mission, and while all this is going on, we're sending boatloads of money all over the world, while we have people in 2-3 mile lines, food lines, while 20 million households can't pay their utility bills, while people are struggling just to pay for essentials, yet we're sending billions over to other countries like it's monopoly money. It's absolute pure insanity what is going on, and so many people are hurting right here. Our infrastructure is just crumbling, and our cities are war zones, and we're more worried about other countries. The hedge, consumer credit shocker. Credit card debt explodes at second fastest pace on record, just as rates hit all-time high. March credit card debt absolutely exploded. It soared $17.6 billion, more than triple the February total, and the second biggest increase on record. This is a very bad sign, ladies and gentlemen. And so many people are using credit cards to pay the essentials, make a car payment, go to the grocery store, make a rent payment. That's what they're using credit cards for now. Remember that your credit card right now is at the highest it's ever been. I think the average credit card right now is a little bit over 20%. Some people are writing me that their credit cards have already gone up to over 25%. From a much lower rate, and now their card from single digits has gone to 25%. Some people 29.9%. An all-time high on credit card interest rates, while people are suffering, and people are using these cards to pay essentials, and they're getting deeper and deeper into debt. And the more debt that they load up on, the more trouble and the more danger they're going to be in. You do not want to be heading into a Great Depression, ladies and gentlemen, with massive amounts of credit card debt. You know, people thought that back in 2008, they could just sell their house in time and get out. And now people think they'll just run up their credit cards or live on their credit cards, and that the banks will go out of business and they won't have to pay their credit card debt. That debt is just going to be passed over to another bank. You're going to be responsible for it. And you know, heaven forbid they come after your assets. I know a lot of people just figure they'll file bankruptcy and then they'll have 7 years of bad credit. You don't want to have bad credit right now. Right now, you want to have absolutely no debt or as little debt as possible. You want to have good credit, excellent credit, so that you can capitalize on these deals. Heaven forbid if you have to move or downsize and go rent an apartment or a condo or even a room. If you have bad credit, you're going to be in trouble. Nobody's going to want to take you. So people are really misguided here, just believing that they're going to sell at the right time or that the banks are going to go out of business and they're not going to have to repay their debt. It didn't work out that way in 2008. People who had credit card debt, people who had mortgage debt, they paid. They paid severely. Here's another one from the hedge. Andy Scheckman. Where else do you go besides gold and silver? I couldn't agree more. Where else do you go right now? Comment down below. Maybe a nice piece of land if you get it for the right price. I had 5 more properties sent to me today, a couple more price reductions on some properties, but these properties are so overpriced that they're going to need multiple price reductions to come back down to reality. But it's a good sign because things are moving in the right direction. I'm seeing more properties being sent to me in the South that are going up for sale, more price reductions. And even with these price reductions, they're not going to sell until they come down to reality. But that's okay. They're heading in the right direction. So I'm going to be patient, just like many of you. But getting back to this article, Andy Scheckman says, regarding gold, when you take out $2,100, when you take out that price of $2,100 with authority, it's game over. That's what Andy Schectman says. So when gold breaks $2,100, watch out. He says, how is it that anyone isn't freaking out that the Fed is basically bailing out the FDIC? The FDIC, in essence, is insolvent. So just like banks, the FDIC insolvent. This is going to blow up regional banks. They're going to blow up regional banks, Andy Schectman says. And I think we're beginning to witness that right now. This has just begun, ladies and gentlemen. This is just the beginning. This has just started. The Fed will be forced, he says, into yield curve control. The next QE will take the Fed's balance sheet from $9 trillion, he says, to $25 trillion. What do you think that's going to do to the US dollar? It's not going to be very good, I can tell you that. What do you think it's going to do to gold and silver? Gold and silver will be a lifeline. It will be insurance that you're going to need. And more than likely, this is how it's all going to end. The Fed will, at the last resort, go back to printing, and they're going to print big, and they're going to try to save it. And this is exactly what got us into the mess we're in right now. Incredibly low rates for over a decade and lots of money printing. And now they're reversing course, and nobody wants to feel the pain. So the answer is, let's go back to what got us here. Let's print more money. We'll cut rates, and we'll print a lot of money, and we'll blow up the balance sheet. Well, then you're going to have hyperinflation. You can kiss the dollar goodbye. It's not going to buy very much. It doesn't buy very much right now. So you better have some gold. You better have some silver. And by the way, if you need a reputable place, go to my link down below. SD Bullion. I've been dealing with them for 4.5 years. Great people. I couldn't recommend them even more. I'll be making another order here shortly because a lot of trouble is coming, ladies and gentlemen. And as Andy Schectman says, where else do you go? Friends of mine, same thing. Where else do you go? I wouldn't buy a house right now. I wouldn't be gambling in the stock market right now. I'm protecting the wealth that I have in gold and in silver. Personally, mostly in gold. But I think Andy Schectman is 100% correct here. And heaven forbid, when they do reverse course and they do begin printing a lot of money and we begin to see hyperinflation in America, the only thing that is going to matter is how much gold, how much silver, how much food, and how much security you have. Here's one from Fortune. Wall Street is running away from the housing market, but why? This was very interesting, and I just made a couple notes on this article. The health crisis housing boom saw a flood of institutional home buying, low interest rates, easy access to capital, soaring rents, and skyrocketing values were just too good of a deal for Wall Street types like Blackstone and iBuyers like Open Door Technologies to pass on. So now they're sitting on a lot of homes that they paid way too much money for. And of course, now all this is over. Things are reversing course. Institutional home buyers are pulling back quickly and very fast. Institutional investors, those owning over 1,000 homes, bought 90% fewer homes in January and February than they did in the first 2 months of 2022. Again, I believe this is the worst possible time to buy a home. I think you're out of your mind if you buy a home right now. I think the market is so overvalued. And look, all the warning signs are there. People are losing their jobs. Inflation is extremely sticky. There's a lot of uncertainty out there. I believe we're going to see 1 to 2 more rate hikes. And I believe that we're going to continue to see a lot more layoffs. And so this all, to me, equals a very, very bad housing market. Look no further than Invitation Homes, the largest owner of U.S. single-family rental homes, which recently became a net seller in the first quarter of 2023. I mean, just absorb some of this data right now and see what the big boys are doing. They're not buying, they're selling. Invitation Homes bought 194 homes while it sold 397 homes. That's the first quarter of this year. Big investors know that the housing market is poised to see prices come down. Investors are waiting for one of two things to happen. Mortgage rates to come way, way down, or prices of homes to come way, way, way down. And I believe it's going to be prices that are going to come way, way down. In fact, I don't believe the Fed is going to reverse course anytime soon. I don't believe they're going to lower rates this year. I believe they're going to keep their foot down this year. Now, when things really begin to break, when things really begin to implode, yeah, they're going to reverse course. But at that point, it's going to be too late to fix any of this. Here's another one from the hedge. Want to see what an out-of-control city looks like? This was, I believe, in Wisconsin. A car thief steals a car, speeding down the road, and slams into a school bus loaded with little kids, and lifts the school bus off the ground, and kids are going flying in the air in the school bus, many of them hurt, and they did not catch the driver of the stolen vehicle. So, you know, I watch videos like this, and it's a tragedy to see little kids being hurt on a school bus, just, you know, going to school or coming home from school. It's just tragic. And it just shows you that people have absolutely no respect for law. They have no respect for you. They have no respect for your kids. Nothing. No respect for your assets or your life or law enforcement. And we're going to see more of this. And when I watch videos like this, actually seeing the car slam into the back of the school bus, lifting it off the ground, it's horrific. Think about if that was one of your kids. It just makes me think, as the economy gets worse, how much more chaotic the streets of America are going to become. And so many people make these videos talking about what's happening right now and how bad the economy is, and that, you know, everything's over, and, you know, it's going to get really bad, and you better hunker down, and, you know, you better be ready. Well, ladies and gentlemen, I know that a lot of people are not ready. And one of the most important assets you better have is security. Because just take a look at what is happening across the U.S. right now. The amount of crime we're seeing is unlike we have ever seen in the history of this country. And people just don't care. And when people lose their jobs, when they lose their food stamps, when they lose their government subsidy, or the inflation's so bad that it just doesn't buy anything, they're gonna stop robbing the stores, because the stores will be empty, and they're coming to your homes, and that's just the way it is. And I know that might scare a lot of people and make a lot of people feel uncomfortable, and that's good. You should be uncomfortable, because if you're not ready to deal with this, then you're jeopardizing the health and safety of your family, of your kids. And watching videos like this, it just reminds me why I have to have the right mindset, why I have to be training, why I have to be prepared, because I'm just not one of these people that's going to allow somebody to come to my house and take everything that I've worked for, or hurt anybody in my family. And I think you should think the same way. And if you're not working on this right now, how are you going to prepare? How are you going to be ready in case something happens? And heaven forbid something does happen, are you going to be ready to deal with it? You have to be mentally and physically preparing for this. And just sitting on the couch playing video games and watching Netflix or watching cartoons or just hoping that it doesn't happen to you, that's not a good plan. It's not a good strategy. So, you know, take some time out of your week or your weekend and make sure you're prepared to deal with some very bad people. You know, we can walk around all day and talk about how bad things are, but what are you going to do about it? What are you doing right now? Take the time right now. Use this time wisely right now. Number one, to make sure you have security, that you can protect your assets. You think somebody wouldn't take your food? You think somebody wouldn't take your gold or silver? You think somebody wouldn't come into your house and take what you've worked so hard for? They're doing it right now in the good times. What do you think this looks like in the bad times? This is the good times, ladies and gentlemen. Believe it or not, we're going to look back and go, these were the good times. And look at the crime right now. Crime is going to double. It will quadruple, because people are going to get real hungry, and law enforcement just isn't going to be able to keep up with it. And the bad guys are going to know that, and they're going to have a free pass to come to your house. And guess what? Law enforcement is not coming to your house. They're going to be inundated. They already are. They're overwhelmed. They're inundated. They're quitting. You're not going to have anybody coming to save you. You're on your own. So I cannot stress that enough on this Saturday, because I watched so many videos and everybody talks about just the financial aspect of what's going to happen. We get it. We know that. But what they don't get is what this is going to produce socially, and what is happening socially right now. You have a very lawless society right now, and they would not think twice about hurting you or your family to steal your TV, let alone an ounce of gold, an ounce of silver, your food, whatever. So be prepared. I really want to stress this today. Really get prepared. Make sure you have the proper training. Make sure that you have the proper mindset. Make sure you have the proper tools and preparations, ladies and gentlemen. And I will close with this last one. Chicago Police Department tells businesses to buy riot glass product to prevent burglaries. Again, now this is what Chicago police are telling the store owners in Chicago. Get riot glass so nobody can break into your building. They're not going to be there to help you. They're telling you that right now. Fortify your business, fortify your home, make sure you have the right tools, the right training, because they're not coming to save you. They just cannot. And so we're going to see more of this. I mean, think of, like, I could not even think 20 years ago that we would be sitting here today talking about riot glass, talking about the mental mindset, talking about having to train, having to protect your assets. I never thought that I would ever see this country in the condition that it is in right now. And so many people walk around like zombies, completely in a bubble, completely ignoring reality, just disillusioned by reality. It's incredible. It really is. But we can't worry about those people. Now we have to worry about us. You have to worry about you. I have to worry about me, my family, and I advise that you do the same. Keep doing what you're doing, ladies and gentlemen. Many of you are writing in, and you're very, very bright. Many of you very, very well informed, open-minded, very, very prepared. Keep doing it. And keep writing in those comments, because you keep waking up people every day. And remember, you don't need $1 million to do this. Take a little bit every week out of your paycheck. Go out, buy some extra canned food. Go buy some extra bottled water. If you can afford to go do a little bit of training, if you can afford to get in and get to a gym, do some MMA, do some jiu-jitsu, anything that is going to benefit you physically is going to be huge. And most of all, one thing that is the most important and is absolutely free, make sure you're saying your prayers and walking close to God. Ask for direction, ask for protection, and God is going to answer you. I promise you that. This is the time to get right with God. Number one, make sure you get your security in order. Number two, make sure you have essential products like food, water, medical kit, trauma kit, things of that nature, all the essentials. And then once you've done that, make sure that you have extra cash, gold, and silver put away. Just add a little bit every week, ladies and gentlemen, and a little bit's going to go a lot farther than nothing. Let me say that. A little bit is going to go a lot farther than nothing. I mean, if the lights went out, if we had a cyber attack, we were down for 2 weeks, and you have 30 days of food, and you can protect it, you're going to be okay. You put the odds in your favor any which way possible. Nobody is going to be 100% covered. I don't care how much money you have, how much training you have, how much gold or silver you have. Nobody is 100% prepared for what's coming. But all you can do is do the best that you can and put the odds in your favor the best that you can. But if you do nothing, you're guaranteed to lose. That is a terrible strategy. Doing nothing is the worst strategy possible. Do a little. And if you can do a lot, start doing a lot. I'm going to leave it there today. Have a great weekend. God bless all of you. Thank you for the prayers, the support, the letters, everything. None of this is possible without you. Make sure to like, subscribe. And as always, I look forward to speaking with all of you very, very soon.
Mm-hmm.